Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, Maja here, the editor of Smart Property Investment. Today I am filling in for Mr. Philip Tarrant. Now I know that everyone loves and enjoys Phil's voice, but I'll try my best to fill the gap today. So stick with me as you're in for a treat today. So welcome to the show. The property market is as busy and dynamic as ever. As Phil has previously shared, the traffic on SPI is huge at the moment. And of course, that is a reflection of the current market. And I want to thank you all for trusting us and for coming to us for your investment news, tips and tricks. So today with me, I have some of my personal favorite data gurus, or data nerds as they like to call themselves. Welcome back to the show, Investor Kit's Arjun Paliwal and Subtrends Kent Lardner. Welcome guys.
Thank
How are
you.
you today?
Very good.
Good to be on, and I think we're not missing Phil's voice. We'd like to have you on, Maja.
Oh, do you? Prefer my voice to
Yes.
Phil's? Do you hear that, Phil? So now you guys have a new report. It's called Australia's Top 20 Investing Regions for 2021. So I flicked through this report this morning. The level of research and detail and just the mind-blowingly great data you guys have managed to squeeze into this report just literally blew me away. Tell me, why are you guys giving away your secrets? Surely the other sort of buyer's agents will be after you after this, because the report is quite amazing.
Well, firstly, Kent will agree, a lot of long, late nights to really get that going and get the methodology right. But look, we're here to share that just because, it's important for investors to make the best possible decisions, right? And we also hear a lot of people claiming hotspots and hot this and everything's firing away, but the data doesn't tell that. And so we felt that, hey, instead of just scraping over a few areas saying this looks good and that looks good, we wanted to go deep, and hence why it's over 140 pages as well. So that's kind of my thoughts. Ken, anything to add to that?
I think one of the biggest purchases so far have been buyers agents. So that, they're digging it, and it's quite a friendly environment. So, I'm delighted to pick up the phone and chat to a buyer's agent about the report. So, for mine, if we can play a role in helping, especially, if we've got the detailed analysis already done, and we don't just help the investors, we can help the buyer's agents who in turn help investors or owner-occupied move into some of these regions, then we're happy.
Exactly. And just working on SPI, I know that the level of information currently out there is just, there's a lot coming, even just my way, the hotspots, the top 5 this, top 5 that. So tell me a little bit about how hard that was sort of, compiling all that data, churning through it, probably very long, late nights. You two guys, I guess it's good that you guys get along so well as well, because otherwise it would have been a little bit awkward, right? But tell me just your methodology behind compiling this report. How did you get to these top 20 regions?
Yeah, so when thinking of the methodology, we had to sit back and thought, look, there's regions I like, there's regions Kent likes, and then there's regions where we think others may like. And so this made it pretty hard to begin with. But then we came back and thought about it and said, what do investors really want? And they want good capital growth in an area with relatively low upcoming or incoming risk, combined with a property that gives them a good yield and is easy to rent. Now, yes, we could probably dial up a little bit more capital growth heavy thoughts on one end. We can probably dial up the rental thoughts on the other end. But the truth is, as an investor, you want all of it. And so we thought to ourselves, how do we put our biases aside of what we like and what we're thinking of, and really talk about the indicators that show all of it? And so to touch on the indicators, just some that are, important for us to consider. When I talk about price growth, the most important one for us was inventory levels. So Kent, you can touch on inventory levels.
Yeah, and just on the point of how did we come up with it, really the data speaks for itself. The saying goes, let the data speak. So the regions that have been selected themselves. the key for us was determining what was important. What were those important things to measure? So, what we looked at were 6 key metrics, and the first one was the building approval pipeline. So we're specifically doubling down on houses here because we saw at a national level, we saw a lot of risk associated with apartments. So we made a conscious decision to focus specifically on houses. So when we're looking at approvals, building approvals, we're looking only at houses, and we're looking at houses, the back series. So there's always a bit of a lag, obviously, but there's less lag when it comes to a house, so it's a lot easier. And then we feed that into a ratio. So we effectively look at how many properties are in the building approval pipeline relative to how many properties are in that region. So that's our first metric.
And that really gives us that incoming risk view, right? Because as an investor, the beauty about property is houses don't fall out of the sky. And we could argue to some extent that maybe with the pace some are being built at, they might be falling out of the sky,
right.
But they don't. And so the key is when we look at those last 12 to 15 months of approval, we're genuinely able to see, hey, what's going to come up here? And so that then led to the second indicator, which was inventory levels. And we're really now trying to go, how do we perfectly combine listings and sales in one picture? And this is the beauty of inventory levels. It tells us that combination of, our sales averages combined with how many listings are online. And that helps us see a low inventory number equals more market pressure. And if you've got low listings to what sells in comparison, that really means that something's going to change. And what usually changes, people can sell faster because there's less listings available, more buyer demand. And it tends to mean that a vendor can sit back and go, why should I discount? Why should I make my price cheaper? And so these are those combining effects of the next few ones, which moves on to the third indicator being days on market. And we're looking at both where it is now and the change. How fast is something selling? What was the difference between last year? If we go over to some of the rental trends, we've got vacancy rates. And that comes back to answering that question of an investor going, how soon and how likely am I able to get a tenant? Yield, the return, and then lastly, the sixth one is rent price movements. Is the same pressure that we're seeing on price happening on the rents? So that's where Kent came along and said, hey, why don't we create this model where we can put all 6 together, score them in a way, and rank them from some of the top in the country that balance all of these areas to some of the ones that don't. And so this now allows us to go, hey, those are just low inventory but don't have good rental markets. We don't want to talk to you. Not saying you're bad. You will still grow. But it means that I've got the asset, but what about the hold? Is it easy to hold? Are you going to find a tenant quickly? These are the questions we needed to answer. Then we talked about those areas that said, great 10% yields and 6% yields, all the great rental income, but is someone dying to just get an extra $10 a week in rent or $50 a week? I don't think that's the core purpose we invest for. So we moved those aside. And this is where Kent came up and, started looking into some of the modeling.
I think data visualization is a big part of it. So we present this in what's called a radar chart or a radar graph, and you can see some gaps. So for example, if you're looking at one particular area and you see that it's a little bit lower in the score, what that does is it prompts us to say, well, is there justification for still including it, even though it might be relatively lower score for one particular variable relative to those other 6 metrics or 5 metrics. So I think that was a big part of the time we spent on this, was actually justifying the entry of something that still bubbled to the top in terms of the aggregate score. But we needed to actually say, what could we split hairs? Could we pick one area over another through justification? And that justification, one example would be, what's the trend? Is it getting better? So inventory is a good example. You've got a lot of areas that may have been a year ago 8 or 9 months of inventory, and then that's flowing into 5 or 6 months now, or going lower yet again. And that was justification for maybe pushing something in that at the moment, as of the time of the report, may have had an inventory level that was 4 or 5 months. Typically, we were looking for something a bit shorter than that, but that's how we approach this. So predominantly science, but in some cases what we're doing is saying, is there any trend line here that we can feed in and say, what is this going to look like in the next 3 to 6 months after somebody actually dives in and buys a property in this particular market?
And guys, hearing all that, can you just sort of tell us all why is data just, the most important thing when buying a property? Obviously with investors listening to us now and people that are maybe looking at investing for the first time ever, and they're seeing this booming, crazy market, and they're seeing, for example, the Central Coast is going off. I'm going to go there. I'm going to buy a property. I'll be set. Why is that sort of not the right methodology, if that can even be referred to as a methodology, to use to sort of, why do you need reports like this?
This is where opinion and bias, come into the mix. A perfect example in the world of buyer's agents is a Brisbane-based buyer's agent living and buying in Brisbane. Tell me one moment where you can pick up the phone and call them and say, is the market bad? And they agree. It's not going to happen. And so this is where so many different opinions come into the mix. And this is what data does. It just allows us to go, opinions aside, if we made all things equal, what would it look like? But I think the key thing to also point out is all things aren't equal in property. And when we talk about data, when we talk about, what we're seeing, are we capturing in the views? Are we capturing in the hillside? Are we capturing in the great land sizes here versus there? Are we capturing in the stations that are here or not here? So there's always going to be those few intricate pieces and, of course, the lag in data. But one thing that you can't argue is trend, the direction in which something is going. We can say listings increasing in an area is typically not good news. Irrespective of if it's got a good school, a good infrastructure piece or something, there is something that's going to be disturbed which might not make the same dollars make sense. And so this is why we wanted to really capture that data to be able to go, let's look at trends, let's look at where things are today, and make a balanced opinion that captures those three things. The risk I'm going to have ahead, the price trends and pressure today, and the rental pressure today. How is it to hold? Is it likely to grow? Am I in big risk or low risk ahead?
And now we don't want to give too much away, but the property nerds have been generous enough to reveal one of their top 20 hotspots. I think this is the moment everyone has been waiting for. So this place is Marion in Adelaide. I have to say I'm really glad it's an easy one to pronounce. Some of these regions can be quite challenging. So tell me, guys, I think Marion is about 10 kilometres southwest of the city centre, if I'm correct. So what's so special about this region?
Firstly, we're billing Maja for the one region out of the 20 we've given away. But look, we're only definitely going to only share the one. For the rest, the 19, they're available on the report. But Marion's special for those key reasons that we talked about. It's fairly affordable. Inventory levels are low and have been getting lower. Things are starting to sell quicker. It's extremely easy to find a tenant due to the low vacancy rates. Rental yields are pretty healthy. And rents are increasing. So those 6 core indicators, and then topping it off with building approvals, there are some patches where we're going, a bit of risk exists, but then there are some patches that are going, you can't build much, won't be able to build anything here. So that's the kind of overlying and overarching thoughts of what we're seeing. Kent?
Yeah, I like to look at the geography as well. So some of the regions that we include have a natural boundary. So if you do a 360-degree radius around some areas, you can say, wow, there's a lot of land that's going to become available or could become available for pipeline supply. But a lot of these areas that are adjacent to water or a valley or a mountain range have a tendency to impact the future pipeline supply. So that's always a standout. So sometimes when we're measuring inventory or building approvals, we look at that as well and say, well, what's the potential future hold here? Is there going to be an untapped reserve of land that's suddenly going to open up? And many of these locations, you can see that there's some natural geographical boundaries.
Now, guys, we're going to have to take a very quick break, but when we come back, we'll continue to talk about Marion.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyer's agency.
And we're back. We've got the property nerds on the Smart Property Investment Show today. We are talking through their brand new report, Australia's Top 20 Investing Regions for 2021. Now, one of these regions is Marion in Adelaide. Now, guys, you gave us a little bit of an insight into Marion just before, but just backtracking a little bit, how do you guys actually define these regions?
Yeah, a statistical area 3 or a statistical area has been defined by the Australian Bureau of Statistics. I love my 3-letter acronym. So the ABS for Australian Bureau of Statistics and SA3 for a statistical area. So backing up for a minute, a statistical area 1 or SA1 is the smallest area that they divulge and give you all of the census information without getting into the privacy issues. So that's a fairly small unit, give or take around 200 homes. And then it's a building block. And the SA1 fits into an SA2, which is give or take probably about 2.5, 3 suburbs big. And then it folds into an SA3. Some SA3s are neatly aligned to what most people would be familiar with, which is the local government area, LGA. We love it, don't we? So Newcastle's a good example, pretty similar in size. Newcastle LGA, Newcastle as an SA3. But if we go to Brisbane, for example, it's big. As a local government area, it's big. So there's been a lot of amalgamation. So it's a monster city-sized LGA. It's too big to measure as a single property market because you could have one end of town doing something very different to the other end. Whereas the SA3s do carve up Brisbane into several markets. So that's our best example. We pick on Brisbane all the time because of that. Brisbane's a great market at the moment, but that's not what we're saying. But from an LGA level, most people gravitate to the local government area. We don't. It's too haphazard. And the other thing is the reliability. As they amalgamate, suddenly your data sets are thrown out. So yes, SA3s can change, but by and large, there's a lot of stability there. And the other beautiful thing about an SA3 is you've got all that ABS data that you can use. So when we're doing our modelling, we can just tap into and overlay all of this stuff that's already neatly packaged in an SA3.
Mm-hmm. Thanks for that. And looking at your report, it actually gives an outline about all of the key things about a region. So, for example, for Marion, you've got the demographics, you've got the income, you've got the jobs, housing, the sales prices, just everything an investor needs, I think, to make an informed decision when deciding to buy an investment property. But tell me a little bit more about this Marion. I don't think I've actually ever heard of it before, but then I don't know too much about Adelaide.
Well, firstly, I think the Adelaiders listening to this episode are rejoicing, going, capital growth is finally here. It's here in Adelaide. And
especially the ones living in Marion.
Yeah, exactly. And look, it well and truly is. But as Kent pointed out, Marion's a region where you've got 8 to 10 kilometres out, even closer, 5 to 7 kilometres out on the north parts, going to suburbs like Plympton Park, South Plympton on the north side. You have very good proximity to the airport, CBD. Those things aren't what we define as investing success, but for those who want to know more about the region, it goes down to the south parts of Shido Park and Hallett Cove. And as you go from the north to south, the north is all about amenities and key things nearby. And people will consider even houses that don't probably look in the best shape just to be in those areas. And then you've got the south side of Marion, which is your Hallett Cove and Shido Park, and people are typically families. They want the ocean views of Hallett Cove, the stations, the shopping malls, and they want the big 600 to 800 square meters of land, grand homes, 3 and 2s, 4 and 2s. So Marion's quite diverse in its layout. And, you've got the east parts of Marion that are full of education precincts, the universities, the Tonsley precinct, and then you've got the west parts of Marion that are just a stone's throw away from the beautiful Glenelg Beach. So that kind of gives people a bit more of a feel. But yes, in terms of all of the breakdown of data, there's so many different points that we're touching on. I guess the key and the most important, or I get my favorite part, is the summary page. When we summarize the data sets into paragraphs. So just to give you an example, we've got the inventory region trends charts as the final page of this report for the region. And we talk about 3 data sets. Inventory now, 2.88. Inventory 6 months ago, 3.27. Inventory 12 months ago, 3.72. So to someone looking at that and go, all right, that's a 23% 12-month change. What does that mean? Well, beside each data point, when we've got that cluster, we've got a paragraph. So what we said over here is the majority of the suburbs in the Marion region have inventory levels at 3 or lower and are still trending down from 12 months ago with a 23% decline. And it's now at the low levels that we are expecting price growth to intensify. So this is kind of bringing that, what does this mean with what the data says? And that's kind of the key part of one of our report segments.
And I'm just having a look at the report now. It really is very detailed. Marion, actually, it's on the coastline?
Yeah, it's got some close by. So the Hallett Cove suburb on the south side is close by to the coast. And then you've got the centre point, which is about 5 to 8 kilometres away from the coast, which is Glenelg Beach and Seacliff and Brighton.
And how far back do you guys sort of look at? You were just saying sort of 12 months. And how far back do you go when determining these suburbs and saying, Marion is the place to go to?
Yeah, so a lot of the data we play with is up to 10 years old, but most of it is focused on the last couple of years. So typically we play around with forecasting as well. So we use machine learning. We use lots of data sets. Not all of the data sets that go into the models enter in here because we'd bore people. But obviously what we're trying to do is fit models out that tell us or predict, all things equal, what things are going to be like in the next year. So a lot of the predictive models that we play with typically forecast 12 months out, and we train that on data that's in most cases up to 10 years old.
Mm-hmm. And we're just going to take another very quick break and we'll be back with you in a moment.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
And we're back. So we've got the property nerds with us today. We are chatting about Australia's top 20 investing regions for 2021. This is the latest report from the property nerds. Now, guys, we were talking about Marion and it all sounds pretty promising down there. What are some of the things investors need to be mindful of, though? Is there some, things in this region that people should maybe steer sort of clear of or know about it?
Yeah, so we touch into particularly important statistic as well, although it's outdated in parts of it. There is a data point that we look at called rental affordability and mortgage affordability. And so what makes Marion an interesting suburb, and we notice this trend across many parts of the country where there are university and education precincts. This is where the proportion of income earners gets skewed a little bit by your student demographic and so forth. And so that can suddenly mean, and look at the data and say, hold on a minute, rental affordability, rent to income ratio, sits at about 33%. Now, the global benchmark of rental affordability is at that 30% mark, right? Just under 1/3 of your income should be there for your living expense, the key one, rental. As soon as it crosses that, it's somewhat saying, hey, you pay a bit too much rent and compared to what you earn. So the Marion region does cross the 30 for rental and mortgage. So from a data set, you might look at it and go, oh, are people stretched here? However, that's not really the case when you expand the greater region because of that student demographic across the education precinct. So that's the first part, in my opinion.
Yeah, and that's the same thing where you've got areas that have got a lot of retirees or pensioners. So it's the same thing. It's a median. So what you can often do is drill down to a smaller area. So I mentioned earlier on an SA1. So you can start to look at the neighbourhoods that make up the broader suburb or the broader region and then start to look at the affordability ratios down to that granular level. So that does help. But in most cases, we break it down to a suburb or an SA2, and then we can identify, hang on a minute, there is a cluster that's skewing this in and around the university as one example. So I think that's the big standout for me. There's some fantastic census data out there. So I'm just surprised. I think a lot more people should be using it in these models.
And, funny, Ken touches on the affordability for some of our older markets. Port Macquarie has over 40%.
Massive. So it's a great example of how the data can get skewed because you've got so many people but when you look at it, a lot of those people that are retired don't have a mortgage, but their income is being thrown into the mix. So you just got to dig a bit deeper. And to the point about the affordability, there's a great paper that's published by Demographia, and it covers several countries and compares using that same metric of affordability, i.e. more than 1/3 of your income spent on housing. And it's terrific to see. And more often than not, Australia is up at the top of the chart. So, we're not the only ones in the world using that metric.
And I guess the last thing as well to add with the data that can put some people off at times is the analysis of pressure also means it's tough to buy. So the good news is we want to show you locations using our techniques and data sets for market pressure and analyzing market pressure. That is the key to capital growth. Growth doesn't exist from getting a 50K discounted deal and you think it's a sweet deal and then no one else is paying more for stuff. It exists in markets where someone is going to pay more, which is high pressure. But the downside is we had the luxury of, having our extended team go on the ground, comment on open homes. We've got a funny thing called the shoe index at Investigate.
Shoe index.
And this is where we take photos of
People's
shoes.
shoes?
Yeah, people's shoes outside of open homes. We go, wow, there's 20 shoes out here in this open home. And so it's very popular in the western parts of Sydney where a lot of people are courteous, drop their shoes off and go in. And so what we've noticed is just picking up like crazy. It's very common to have people in, suburbs down to south of Hallett Cove with 100+ people at the first open home. So that's where there is the pro to pressure, growth will occur, but the con is don't expect it to be a breeze to buy. You got to roll up the sleeves, got to put in the hard yards. And this is where we try and protect investors as well by looking at 10-year trends. Kent pointed out the importance of multiple years and layers of data. When we look at the 10-year, many of these locations, not all, have not had a great 10-year performance. And we actually like that because if it constantly keeps booming and performing, are you going to know when best to jump off the treadmill or is this something new? Remember, it's much easier for me to see pressure analytics when it hasn't been showing something because it's new. And so that's where Kent goes, hold on a minute, something's showing in Marion here because it really hasn't been showing that before. It's so easy to spot. So that's the final part as well to point out and how we protect people from the too hot, as per se.
Is it a thong index in Darwin?
It's definitely a thong index, or what we call jandals in New Zealand, where I'm from. So,
just to sort of clear up, you're not going to actually be seeing any pictures of shoes in this report. But tell me, guys, just sort of talking about how hot the market is at the moment, and we are sort of seeing people just, going off sort of Sydney. I live in Mossman, for example, and the other day a house sold, I think it was like over 2 million above reserve or something like that. So what is actually happening? And apparently, a record amount of people actually showed up to this auction. Why is everyone flocking to the same areas? I know Mossman is not part of the top 20.
Yeah, it's FOMO. It really is. And it's universal across most regions. So yes, there are a handful of regions that aren't experiencing the big growth, but they're the minority. So across the board, it's housing specifically. I wouldn't say that the apartment market is experiencing that. It's quite the opposite in the CBD. And probably the other call out for me is, obviously, I think a lot of this is driven by interest rates, and it's an exciting time to get into a home if you're a first home buyer. And I think a lot of those first home buyers exiting the rental space, getting into their first home, they're looking for affordability. So I think a lot of these regions tick that box. They're not first home buyers. I don't know if there's too many of those in Mossman. But
that's right.
Yeah, and first home, $3 million.
It's a bit of an aging population in Mossman, I think.
Yeah.
Mum, could you help out with the deposit? Just, $300K for 10%.
12 mil.
And that's where you raise an important point, Maja. Like, why isn't a few regions that are on our radar, Mossman, the suburb there, SA3 of Pittwater, SA3 of Warringah, SA3 of Wollongong, SA3 of Leichhardt, they're some of the strongest markets in the country. They've got inventory levels starting with a 1. So why they aren't on the report is not because they aren't going to grow. It's simply going, we know these areas are grow, and we made a conscious decision to go, investors are trying to find a balance. Because if you could get growth to similar percentage levels and see a rental value that's much easier to hold, and repeat that once again due to a level of affordability, and be able to hold your asset just because you found a tenant so quick, would you choose just to feel good about where you bought and bought expensive, or would you choose to have that? So that's kind of the decision we made. Otherwise, all those places, Warringah, Pittwater, Leichhardt, Wollongong, even when you stretch out to Newcastle's premium areas, they're all a big tick. They make sense.
For the high net worth individuals.
Correct.
Yeah, this is a balance.
Not people like me looking to buy a first investment property.
But this particular report is designed around balance.
That's right. And tell me, guys, just going back to Adelaide. Adelaide has been a very exciting city over the past sort of, the COVID period and in 2021. According to CoreLogic, it is one of Australia's top performing capitals. Now, I remember reading somewhere that Adelaide is probably one of the most isolated cities in the world because it's just so surrounded by desert. I'm not sure if that's correct, but tell me, why is Adelaide special? What makes it so special?
Well, what made me realise that it's pretty isolated is when I saw Stephen Marshall, MP over there, put out a post recently, and I found this pretty cool. He said, the biggest, I could be wrong, we'll search it up, the biggest safari experience outside of Africa is coming soon to Adelaide. And I'm talking not Adelaide and then drive a few hours to a regional location for it. I'm talking like
half an hour,
50 minutes, and you're out in the biggest safari, one of the biggest safaris in the world.
For mine, I personally know two families that have returned from Melbourne and moved back to Adelaide. And I'm bumping into people on a regular basis with that same story, a friend or a family member or a work associate who's moved or has exited Melbourne. So there's been this mass exodus from Melbourne City, either into Victoria regions or back to Adelaide. So it seems to be most of that movement was Adelaide to Melbourne over the last 20, 30 years. And a lot of these people, the lockouts has probably been the driver for them to say, hang on a minute, Zoom, work from home's now acceptable. I'm going back home.
And Tourism SA, if you're looking for sponsors, we're looking for sponsors at the Property Nerds here, so we'll be taking your inquiries if you'd like to reach out.
I do love Adelaide too. I remember last time I was down there, it was sort of before, it was 2019, given we haven't sort of been able to travel since, have we? I was meant to actually go down over the Christmas break, but that got cancelled with the Northern Beaches lockdown. But I do actually like Adelaide. I like the culture, like the cafes, the restaurants. It has sort of a European feel,
beautiful.
but then a desert feel at the same time.
I mean, I was thinking about it before, and look, I'm sure many others are guilty during this COVID work from home shift that we're seeing, where they're just going, a weekend comes up and the whole Sunday goes just from scrolling dream homes, and some people call it house porn, as some people call it. But what I'm just seeing is like, where can you go in Australia, and I could be proven wrong tomorrow, but where can you go in Australia where you're in a capital city, you feel like it's a Sunday morning, you'll drive 25 minutes and you're in McLaren Vale. You might go another 20 minutes in another direction and you're in some of the best beaches of Adelaide, Glenelg and Henley. And then, you go, okay, well, I'm going to go for a safari experience in 45 minutes, and I'll go to a little German town known as Harndorf in 45 minutes with some amazing cheese. And then to top it off, you can head out to the city and within 10K. So, I mean, look, I'm not excluding the Adelaide's crazy traffic, which is surprising as well. Adelaide, whilst not as populated as our major cities, something's funky with their roads. Like the way they manage traffic right now is pretty poor. So I think if that improves, it's amazing. And this is all data aside. This is just me, thinking about living there one day. But
oh, really?
There's not going to be road rage there because they're not of convict stock. Whereas over here, we're all convicts, right? So I think they're a better breed.
Would you say that any city in Australia has their traffic under control, though?
True. I mean, look, I think this doesn't count as a major city, but I remember waking up at a farmhouse in Orange one day, and all of a sudden I went down the road and I felt like I was miles away with how you look at the surrounding. I went down the road, we're at a cafe full of people, and then another down the road and you're in, a winery having experience. So some people have it pretty good.
Yeah, that is true. But tell me, guys, I don't know if you want to sort of give that much away, but these 20 regions that you guys have picked out, what state would you say has emerged as the most popular?
Oh, this is a tough one because, we're across New South Wales, Victoria, South Australia, ACT, Queensland. I think Ken and I would agree on this, what's really standing out right now is how strong ACT's been traveling. We've got a couple of regions of ACT in there, and it's just been blowing me away. I mean, it still has me as an investor 1 foot in, 1 foot out just because of the crazy land taxes and all that sort of stuff, but it is on fire. Ken, would you agree?
Yeah, the inventory levels are so low. I've been calling it that. I wouldn't be surprised if at the capital city level, within 12 to 18 months, we would be calling ACT as the most expensive city in the country.
Wow.
A lot of that's how we divide up and capture the market, which is the Greater Sydney, which is a pretty big market for all those concerns, the same concerns we've got with LGAs. But I think in 12 months' time, we might see a changing of the guard.
Now, Canberra is a city where there's no traffic. That is
True.
why I remember being in Canberra sort of over an Easter break, and all of the government, obviously, people had gone off into, gone home to Sydney, to Melbourne, to wherever they're from. And the city was just, there was no cars anywhere. It was just,
Yeah, it was a
quite
ghost town,
eerie.
right?
Yeah. The Walking Dead. Now, the report is really easy to navigate. It is 154 pages long, but don't let that scare you. There are a lot of tables, facts, figures, graphs. It's actually quite simple to scroll through. So if you're looking to invest and you're thinking of going regional, grab a copy of this report from the Property Nerds website. You won't regret it, trust me. Well, thank you guys for joining me today.
Thank you.
Thank you, Maya.
I'm sure we'll be catching up soon. Thank you for the report. I might actually use some of these tips and tricks in my own investing journey.
Like I said, we'll send you the bill later. It's all good.
Phil, please address it to Phil. Well, thank you to our audience for tuning in today. I hope you didn't miss Phil too much. He'll be back on next time. Don't forget to write to us. If you have a story that you want to share with Smart Property Investment, write to us on editor@smartpropertyinvestment.com.au. Thanks again, and I'll catch you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.